Hello, trader. Welcome to our lesson 5, episode 2, whereby in this session we'll be talking about session trading and also the Henry confirmation. I know this is one of the important and key areas when it comes to trading, and I'm very sure that you are very curious on understanding this part of our session. That is, how do you take the Henry confirmation, right? After you have analyzed the market, after you have done your top down analysis, now you need to understand as a trader what time of the day am I supposed to enter my trades? What kind of entry confirmation am I supposed to be looking for? So that is purely what we'll be talking about in this session. All right. So, as you have said, we'll be talking about the session trading and entry confirmation, whereby we'll be understanding the major forex trading session, identifying when volatility and liquidity are highest, and combining session with liquidity and market structure, know when not to trade, confirm high probability entries using the session timing and the structure. All right. So since we have done all of as much as liquidity, how to do the top-down analysis, how to analyze the market from the higher time frame as you go to the lower time frame. Now it's higher time. Now we should go down to the lower time frame and look at how can we be able to look for this entry confirmation. All right. So first of all, I'm gonna take you through three sessions of trading. So whereby we do have three major sessions. We have the Asia session. All right. We also have we have the London session. We have London session, and then the last one is the New York session. We have New York session. So these are the three major sessions that we do trade as retail traders. So if the in the Asia session, we need to know which pairs move well during the Asia session. So for instance, if you wanna be measuring on the yen pairs, the likes of GPP, JPY, USD, JPY, Euro, JPY, those kind of pairs that has yen associated with yen, they move very well during the Asia session. Also gold, if you also trade gold, you can also trade gold during the Asia session. All right. So we have the London session. So London is known for dollar. All right. So dollar really moves very well during the London session. The likes of Euro USD, GPP USD, Audi USD, they normally have a very good volatility when it comes to London session and also the New York session. All right. So depending on which time of the day are you available for trading, now it's up to you to choose which session works better for you and also the pairs that you trade. You need to understand which pairs moves during this session. All right. So if it is gold, you have said gold moves well during the Asia, so you can trade gold during the Asia session. So for me, depending on the time that I have on my country, I'm not able to trade during the Asia session because most of the time during the Asia session, I'm asleep. So I cannot be watching at the market at Asia session. So the only time that I'm available to trade is either London session or New York session. So that's where you'll find most of my trades will always come during the day, either during the London session or the New York session. So someone might be asking, which indicator do I use? So in terms of indicator, so I do use this indicator called the ICT kill zone plus pivot by TF4. So this is the indicator that I normally use. So you just go here on top here where we have the indicators, and then you search for that indicator. It's called ICT kill zone plus pivot by TF4. So you just click on it, or you can just highlight it to make it your favorite, at least to be appearing here. So when you do that, it will automatically appear into your chart. So let me go to, I show you the timings for the session. Which is this one? Okay. All right, all right. So let us go to the timings. I'm going to settings. I'm going to turn on my indicator, and then we are going to settings. I'll show you the timings. All right. You click on settings, and you go to the settings. These are the inputs for the indicator. So for me, I've just customized it to be showing only for limitation of only 10 days. So for the past 10 days, I will be able to see my sessions. Past that, it will not be reflecting. All right. So if I go back in the time, so when the 10 days are over, I cannot see my indicator. You can see from here going back, I'm not able to see the indicator. That is just to make my chart to be a little bit cleaner. All right. So moving on, time frame limitation. I've also limited my indicator not to show on time frame more than 30 minutes. So if it is 30 minutes and below, I'll be able to see my indicator, but above 30 minutes, I won't be able to see that indicator. So the time zone, here you customize it depending on the time that you are. For me, I'm using GMT +3, so I just will make it to be visible there. So the most important thing is the timing for the kill zones. So for me, on my country, since I'm using UTC +3, that is the time that I'm using in the East Africa, that is Kenya. So let me just show you that. So these are my timings. So you have the Asia. You can just have the same. You can just change it to UTC +3. First of all, you have these times, and then you can just change them to your own time. All right, or you just convert them to your own time. So the Asia for our country, for me, it starts from 3 a.m. all the way to 8 a.m. in the morning. All right, so we have the London session, which starts from 10 a.m. in the morning all the way to 13 or 1 p.m. And then we have the New York AM, which starts from 3 p.m. all the way to 6 p.m. my time. All right. And then I don't think whether there is anything that is much important. The other thing you can, uh, the rest you can just copy the way I have here. All right. Then the next thing, maybe if you want your indicator to label the days of the week, like this of mine, you can see you have a Tuesday, Friday, Monday. You make sure you tick on these days of the week label. So if you untick them, they are going to disappear. But if you tick, they are going to show. All right. On every day, it will be indicated which day was it. All right. So that is it. That is it on the indicator. Right. I think that is actually the easiest part. All right. So that is the indicator. You can see this box here, this first box here. This is the Asia session, this is the London session, and this is the New York session. So for me, since I always trade during these two sessions, this is where most of my entries will come from, either during the London session or during the New York session. All right. So now, having that in mind, I need us now to see how could you have used the timings very correctly for you to take this entry here on BTC USD. We are going to do this analysis from the 4-hour time frame. All right. So from the 4-hour time frame, what are we having? We can see that we had this break of structure to the upside, right? So at this point of time, we see that this market is very bullish because of this break of structure, the upside. All right. And we see we have a very good demand zone down here from the 4-hour time frame. So what are we expected to do? So since I have a bar replay, I'm going to I'm going to delete everything up to that point. Now let's do this one together. Right? So once the market taps to that zone, let me delete everything here and we do this one together. So once the market comes to my PO high like this, all right? So we have this one as our break of structure, all right? So we have that one as your BOS and you have this one as your demand zone. So what do? You know very well, if you pick your fib from the high to the low, what are you supposed to do? We are supposed to wait for a market to come to the discount area, and then we mark a point of entry that is resting below the 50%. Then you wait for a market to tap to your zone. Once the market taps to your zone, you need to know, since we did from our previous session, we did the time frame alignment. You know which time frame are you supposed to go to wait for your confirmation. Since this is a 4-hour time frame, we are supposed to go to which time frame? 15 minutes time frame. So after the market react to this point of interest, I'm just going direct to 15 minutes time frame. So once you arrive in the 15 minutes time frame, what are you supposed to do now? Is you are supposed to wait for a W formation. All right. What is a W formation? This is the kind of formation that you need to see because you are expecting to see 15 minutes time frame to be bearish as it is approaching what? This demand zone from the 4-hour time frame. So once the market reacts from our demand zone, we are expected to see a shift in structure or market structure shift or a change of character. So once I see this change of character, now it will be my high time to start looking for an entry confirmation. So this is what we are calling a W formation. We have a break of structure to the downside, and then we have a change of character. That is what shows us that the market is willing to respect this kill zone or this key level. All right. So once we have a break of structure, then wait for a market structure shift. All right. Or a change of character. Once you have a change of character now, you start looking for an area to enter. Now I need us to see how you have identified this entry from this zone. Let's uh, let's do this. Okay. All right. So we are going to play. We are going to forward it. All right. You see now the timing of the day. This is happening now during the London session. So let's see what happens during the London. You can see during the London session, there is nothing much that is happening currently. So we continue playing. Right? You see now this is how most of you get trapped by the market. Someone could see, someone could say, now you have a sweep of liquidity. All right. These are the mistakes that most of us as traders we make. Someone will see that one as a sweep of liquidity, and then will identify this one as a market structure shift. You're going to mark this one as a change of character, and then you think now the market is going to start buying from this area. Then you are going to put your buy limit here, stop loss below here, and then you start targeting what? That I to the upside. See what the market will do now. Because this is not a market structure shift. All right. There was no break in the first place. Right? So market never gave you a break of structure here. So there is no way you could have marked this one as a change of character. So what is happening? Market swept the buy side liquidity, a sell side liquidity, and now came to sweep the buy side liquidity. So if I have to mark the last BOS, this is where the last BOS happened. All right. So down here, there is no any break of structure. All right. So don't make that mistake there. So let's continue playing this bar. All right. You see the London session is over now. We wait for the New York session. Let's see what the New York did. Now the New York has kicked in. All right. You see now, what has the market done? Let me remove this. Let me remove all this. You see now what I was talking about? You see now this demand zone. This demand zone ended up failing. Why did it fail? Because this was not a market structure shift. All right. So what is happening here? The market came, swept the sell side liquidity, came to sweep the buy side liquidity again, then pushed down and gave us a break of structure to the downside. Now you see, we have a very good BOS to the downside. So what are we waiting for? Now we need to see the market closing above this eye. Are we seeing the market closing? Of course, you can see that we have a 15 minutes candle closing above that eye. You see now the time of the day when this is happening during the New York session. Now it's time for me to start looking for an area to enter. All right. So where can you enter this market from? We can see very clearly we have this inversion fair value gap here. All right. That could be your entry zone. We have this inversion fair value gap whereby you put your buy limit order here. Always make sure your stop loss is below that low. That is one of the entries that you can take. All right. Stop loss below there. And then your target should be, if you want to target, you can target 1:3 as your first TP. And then you can leave the rest to run up to that area. So that is one of the entries that you can take. The second entry can be this order block. You see this one, the last sell candle before the buy movement becomes your order block. That also would be your another entry. Your entry from there, stop loss below there, and then you target the same area. All right. So let's see now how this market played out on this example now. All right. Let's see how this one played out. I'm going to play. See now, The market is coming back. All right. Have we been activated? Not yet. Now, the both entries has been activated. You see, for this one that you took on the inversion fair value gap is active. The other one that you took from the order block is also active. And now let's play and see what this trade played out. You see what is happening, right? The time of the day is very, very, very crucial. You see, you can now forward it on a bigger time frame. That is 1 hour time frame. Let's go to 1 hour time frame and try to forward it. You see, the market played out all along. You see the market trying to go back down and eventually eat the TP. You see, finally the market eat the full TP. So that is how easy it is to wait for this entry confirmation. Provided you have done your top-down analysis very well, right? That is the first thing. You need to understand how to read the market structure. So once you have mastered how to read the market structure, mark your key levels. After you have marked your key levels, that is on your immediate time frame, the time frame that you normally trade, because as a trader, I expect you to have at least 3 time frame that you normally trade. First time frame is your bias time frame, the time frame that you get your direction from. The second time frame is the time frame that you are going to analyze from. That is the time frame that you trade. So for instance, if you pick your daily time frame to be your bias time frame or the higher time frame, I expect your 4-hour time frame to be the time frame that you do your analysis, right? So you mark your key levels on the 4-hour time frame. Then you need a third time frame, which is your entry time frame. For this case, if you have chosen the 4-hour to be your immediate time frame, then the entry time frame should always be 15 minutes time frame. So once the market comes to your key level, you are supposed to go to the lower time frame. That is from the 4-hour 15 minutes time frame and wait for this confirmation. And always make sure your confirmation is aligning with the time of the day. All right. And also, as much as you are taking these entries, don't forget to also pay attention to what we call, remember, when it comes to market analysis, there is always a fundamental analysis and there is a technical analysis. So what we have been doing all along, that is purely the technical analysis, using strategy, analyzing the market based on the market structure. Then you have the fundamental market analysis, whereby now we have to look at the news. All right. I believe you have heard of the news. So this is my advice when it comes to the news. You need to understand which news can you trade, which news are you supposed to avoid. All right. So I'm going to give you the big 3 news that I don't normally trade. Once I see that day we have those kind of news, I will not trade. So these are the big 3 news that I don't trade. We have the FOMC, we have the NFP, and then we have the CPI. All right. So these are the 3 major news that I always avoid when it comes to trading. And when are these news released? Most of the time, you'll find these news are always released during the Asia session, during the New York session. All right. So during the London session, it's very rare to see the FOMC or the CPI. These news always they are released during the New York session. So as a trader, always every day, even before the new week, start of a new week, always make sure you go to the news calendar. If you don't know which platform you are able to see this news, I'm going to recommend a Forex Factory. So let me just share, let me just take you through that. I'm just going to share my screen and show you. Let me share. I don't know where that screen is. I really want to share. Okay, I've seen it. Yeah. Now, just go to any browser. For me, I've just gone to Chrome. We are going to search for Forex Factory. Just search for Forex Factory. All right. Once you have that, just give it a minute to load. Then you click on the first. then it is going to take you to this platform. So once you are here on this platform, what are you going to do now? So you need to create an account. If you don't have an account, you'll just come here on the right top. You click on that area. Since I have an account, maybe if you don't have an account, you are supposed to create an account with the platform. So once you click the account, once you create an account, you just log in. All right. So for me, I'm just going to log out. You can see I've successfully logged out. So if I didn't have an account, I will just come here and create an account. Or since I have one, I'm just going to log in. I put my details there and then I'm going to click login. So once I'm logged in, I have these icons on top here. We have the forums, trades, news, calendar, market, and brokers. So the most important thing here is the calendar because that is what you are going to pay attention to. We go to the news calendar. So here on the news calendar, what can we see? You can see here on the top, this is written the week. This is this week, the current week from July 26th all the way to August, 1st of August. All right. So we have the date or the days of the week. We have the days there, the date, and also all the way from Sunday all the way to Saturday or to Friday. But remember, since the market is always active from Monday to Friday, so that is what we need to pay attention to. We also have the time of the day. So these are customized depending on where I am. All right. So we have the time of the day when these news are going to be released. Then we have the currency, which currency is affected by that news. So you see, if it is USD, any pair to do with the USD is going to be affected by this news. Then you have the impact. When it comes to the impact, so here it's upon you to filter. So on the right here, there is this icon here that is written filter. So once you click on that filter here, you are going to see this expected impact. So you have the high impact, medium impact, you have a little impact, and then you have no impact at all. All right. So these are the only news that I need you to tick. This high impact news and the medium impact news, because that is what is going to bring a little of impact when it comes to the market. All right. So the rest, these ones, you can tick all of this one. There is no problem with that. Then you have the currency. These are the pairs that you trade. So if, for example, you don't trade card, you don't trade any pair to do with the card, there is no need for you to have it, the news that are affecting card. All right. So just make sure you tick only pairs that you trade. For me, since I trade Euro USD, since I trade GPP, JPY, and USD, so I'm going to tick only the pairs that I always trade. So after you have ticked all this, just click apply filter. So once you apply filter, you can see the only news that are going to appear here is the high impact news and the medium impact news. But if, for instance, I have clicked this one and also this one and I click apply, they are going to reflect all of them here. And you see all this news will not have a impact to me. So I don't have to pay attention to this kind of news. So I'm going to untick those two and be remained with the high impact news and the medium impact news. All right. Now you see, like this week, we are seeing that on Monday, that is today, there is no news. Today we have no news. So that means we're going to have, today we are expected to have a low volatility when it comes to the market. We expected to see a slow Monday since we don't have any news. All right. What about on Tuesday? On Tuesday, we have only one news that is affecting USD at 5 p.m., which is also medium impact news. We don't expect much movement on this day. But what about on Wednesday? You see, now on Wednesday, we have FOMC. These are the news that I'm telling you guys I don't joke with. All right. So whenever I see this kind of news, I always make sure that if I'm going to trade this day, it's either I close my trade before the news are released, or if I am already inside that trade, I'm going to set my break even. So in case the news goes on my way, no problem. In case the news goes against me, also I'm secure. All right, because I've already moved to my stop loss to break even. Because I normally say the best way to trade news is by not trading at all. All right. So if you want to trade news, wait for the news to be released, and then afterward you can look for your entry afterwards. All right. So those are the news that guys I was telling you that you are supposed to avoid. All right. So we have NFP. NFP, they are majorly released on the first Friday of a new month. That is when NFP is mostly released. For example, like we have this August. So the first Friday of August, let's see whether we have NFP. You see now, we have the NFP on that day. At what time? 3:30, which is exactly during the New York session. So on that day, I'll make sure that that is next week on Friday. I'll make sure that I will not be on the market during that time. Right? So even if I will be inside a position, I'll make sure I've put my stop loss to break even. Or it's not a must for you to trade in that day. All right. So you can decide not to trade in that day and look for an entry on the following day. All right. All right. And then the other one is the CPI news. Let's see whether we have any day that we had a CPI. All right. Let me go to last week and see whether we had a CPI news and show you this kind of impact that we normally have. All right. Let's see CPI news. That's good. We had the CPI on Tuesday, 14th July. So we had a CPI news at what time? 3:30. You see this kind of the impact that the news brought. You have a high impact news. So I need us now to go to the chart and see any pair that is associated with dollar at 3:30 on July 14th. Let's go to the chart. Let's see whether I'm presenting the chart. Not really. Okay. Now let us pick a pair like Euro USD. Which day was that? We have said it was on 14th July. So 14th of July, we go. 14th of July. 14th of July. At what time? 3:30. How was that day, man? 14th of July, 3:30. Is it on 14th of July? Let's check. Let's confirm the date. Yeah, 14th of July, Tuesday at 3:30. Yeah, here we are. You see the kind of movement the market did during the New York session. This is the candle that was printed during that day. You see, now let's assume that day you are looking to sell. You wanted to sell on this area. So what do you think could have happened? So this spike, this buy spike that was spiked here could have taken you out. And you know, most of the brokers, they take advantage when you have the news. They normally increase spreads and stuff like that. So you'll find that even if you are risking like $100, you end up losing more than that because of the spread, right? That is associated with the news, because market moves very fast during this news. So you'll find that you will end up losing more than you expected to lose on that trade. All right. So guys, coming back to what we are doing here, we are just, what I'm trying to say is that avoid to trade news. Those are the three big news that I don't normally joke with. We have the FOMC, NFP, and CPI news. All right. So whenever we have those three types of news, try as much as possible to avoid looking for entries during that day. All right. So now we are going to look at another example, another kind of entry confirmation that you could have taken, or that we can take basing on the strategy that we use. All right. So which example should I use? Or let's see whether at this area we could have got any entry confirmation from here. All right. So let's use this example. Let's start it from there. All right. So I'm going to clean everything here. You're going to clean everything here. All right. So now this is what we have. We have Euro USD on a daily time frame. We have this one as our break of structure to the upside. And then we have a change of character to the downside. All right. So that is the analysis that you have done from the daily time frame. So what do you do after you have done your analysis? You pick your fib, you place from the high to the low. So what do you expect? You expect the market to come to the premium, look for an entry or an area or a key or a demand supply zone that is resting within the premium zone. So you can see very clearly that you have this order block here from the daily time frame. So what are we supposed to do? Since you have learned the time frame alignment, we are supposed to go to which time frame? For this case, we are supposed to go to 1 hour time frame. So we go to the 1 hour time frame and we wait for our confirmation inside this zone. Right? So I'm going to shift 1 hour time frame. So once you're on the 1 hour time frame, we are going to observe what the market is doing inside this zone. We can see that the market has given us a BOS here. So we have a break of structure to the upside. All right, so that's a BOS. We have a change of character. Someone is going to see this one as a change of character. But how do you confirm that this is a breakout? This is a true change of character or a fake change of character. All right. So I believe I talked about this one in our previous session. So this is what you do. Since I've told you have your 3 times frames, right? I believe now you have your 3 times that you are trading. For this example, we have the daily time frame, we have H4 time frame, and then we have H1 time frame. All right. So we have done our analysis from the daily. We have marked our key zone from the daily time frame. So we are supposed to go to 4-hour time frame or 1 hour time frame for us to wait for entry confirmation. But we are not supposed to go below 1 hour time frame. So there is a way you can confirm whether this is a true break of structure or a fake break of structure from the 1 hour time frame. So what do? We go to the 4 hour time frame and confirm whether this was a true breakout or a fake breakout. You can see from the 4 hour time frame, there is no break here. So market never gave you that break of the structure in the first place. So that means whatever is happening on the 1 hour time frame is most probably a fake breakout. All right. So now you see even from this change of character, we have seen from the 1 hour time frame we have a close, but from the 4 hour there is nothing there. So now if you have you are that kind of a person that you are not patient enough, you are going to see this one as your change of character. You are going to see this one, the market has given you a change of character, and then you are going to look for an area to enter. Maybe you see this one as a very good demand zone to sell from. Now let's play this bar and see what happened. See now what happened? Market came up and took you out, right? Because the first place market never gave you, it was trying to manipulate. Market was trying to manipulate all sellers that we are ready to sell, but the market was not ready to sell. But now what is happening now? We have this break of structure here from the 1 hour time frame. Now we need to go to the 4 hour and confirm whether this one is a true break or a fake breakout. Let's go to the 4 hour. What are we seeing? The 4 hours confirmed the structure that we are having on 1 hour time frame. That is, this really is a true break of structure. Now we have a break of structure. So what are we supposed to do? We are supposed to wait for a market to close below here. So once we close below there, now we have a change of character. We can go to the 4 hour back to the 1 hour, then try to play out our bar. Exactly. Now we have a change of character. We see now the market has closed below there. Now we have a change of character. So at this point of time, remember we are reacting from a daily point of interest here. This is a kill zone, our key zone. This is our key zone from the daily time frame, or this is our point of interest, our supply zone from our daily time frame. So what are we supposed to wait for? At this point of time, we are supposed to wait for an M formation. This is your M formation. We have a break of structure to the upside and then a change of character to the downside. So this is the kind of confirmation that we need to see. And that is exactly what has happened, right? We have a push, a pullback, a break to the upside, and then a change of character. So what do you wait for? A pullback and then continuation to the downside. So this is what you need to see. All right. So at this point of time, what are we supposed to do now? You can either go to the 4 hour time frame. Remember, those are the 3 time frames that we are supposed to play along with: daily, 4 hour, or 1 hour time frame. So here on the 4 hour time frame, you can decide to use this order block here. We have that order block from the 4 hour time frame. So if you are a swing trader, if you want to take your entry from the 4 hour time frame, you can really place your entry from there, stop loss above there, and then you can decide to target your 1:3, 3 hard there, and then you can leave the rest of the trade to come to that area once you pick your 1:3. That is one of the entry confirmation that you can take. Secondly, we are going to see all of them. Don't worry about that. Secondly, we have this breaker block here. We have this breaker block. Why is it a breaker block? Because remember, when this market gave us this break of structure, this was supposed to be our demand zone. So this demand zone was supposed to hold this market and push this market up. But this demand failed. So when a demand fails, becomes a breaker block. All right. So this could also be your second point of interest. All right. So you can also decide to take your entry from here. Where do you put your stop loss? Above this candle that violated this demand zone, this order block or this breaker block, you put it some few pips above there. That is your second entry that you can take from that area. Thirdly, what else can you do around that area? You can see here we have an inversion fair value gap. You see this one. We also have this inversion fair value gap here, or what you call an overlapping fair value gap. So we have that overlapping fair value gap around that area. So since now we want to take our entries basing on session trading, all right, and the session will not be working for 1 hour time frame, day wait for time frame. So what are we supposed to do? Now we wait for a market to come to this area during our time of the day that we are supposed to trade. Now we are going to play this bar until the market comes to this key zone. Right? Let's play and see. Now you see the market has tapped to our point of interest. This point of interest is coming from the 4 hour. Now we are allowed to go to the 15 minutes time frame. So once we shift to the 15 minutes time frame, you see now it is past our trading window. We either trade during the London session or during New York session. So I will not even bother what the market is doing here since it is past my trading window. So what will I do? I'll just wait for the following day and see what the market will do. So we are going to forward. We are going to forward. You see now it is during the Asia session. We forward. Now there is something that has happened during the Asia session. Do you see now? This is the last BOS here. We have this break of structure to the upside, right? And then we have a change of character. And you see that? We have a change of character around this area. So we have this demand zone here. That is our breaker block. That's our order block. Remember, this is the order block that led to this break, right? So when the market violates it, it becomes a breaker block. Okay. All right. So now this becomes your breaker block. So now you can decide to take your entry from this area, from this breaker block, provided it's the right time of the day. Then where are you supposed to put your stop loss? Above this eye here. Remember, this becomes your flip zone. All right. So this is the flip zone around that area. So make sure your stop loss is a few pips above there, around 8 pips stop loss. And then you can target 1:3 around that area. Right? If you wish, you can target that low there. All right. So that is the kind of entry that you can take around that area. Let's see at what time did you get tapped in. You see that trade got activated. We are now active on that trade. If, for instance, maybe this was too early, someone could have said, okay, this happened too early before the time of the day that we are supposed to trade. Because you can see now we got activated during the Asia session. Maybe you are not active around that area. Now you have a new BOS here. Right? So we have this as a new break of structure to the downside. So what are you supposed to do now? You can decide to enter from this flip zone. So we have that flip zone around that area. So once the market broke to the downside, this candle closed. You can see already, once the market closed with this first bearish candle here, we have a break of structure. So this black candle became your entry zone. So you see the market activated you And if you have to put your stop loss at the right place, put it above there. All right. So that is the second entry that you could have taken around that area. Just your TP down there. Let's play it and see what will happen. Would have happened. See the market try to play along, but eventually it will take profit. All right. So you see now that is how easy it is when it comes to this entry confirmation. You wait for a market to give you a signal that it wants to respect that kill zone. You see now we have started our analysis from the daily time frame, but we have ended up taking our entries from the 15 minutes time frame. All right. Because first of all, you need to get to understand the bias. So once you get your bias, mark your key zones. After you have marked your key zone, be patient enough to wait for a market to come to your point of interest. Once market comes to your point of interest, now go to your entry time frame, provided it's the right time of the day. All right, depending on which pair you are trading and which session you want to trade. So for instance, if you have said you are trading the Euro USD, GBP USD, the best time to trade is either during the London session or New York session. You can even check on the kind of momentum, the volatility that you are having. If you try to compare the New York's Asia session with London and New York, you can see that really during the London session and New York session, this pair really moves very well compared to during the New York session. So these are the kind of entry confirmation that we normally take. All right. See the kind of entry confirmation that you have taken from this area purely based on the bias that is from starting analysis from the higher time frame, immediate time frame that you do your analysis from, or you have marked your kill zone, and then you have the entry time frame, right? That is how easy it is. All right, now we are going to exit this and go to the last. We're going to stop the bar replay. And then let's look at the second example of our trade. Let's see whether we have another example of a trade. So there is this trade that I took last week. I'm going to show you an example on that. Let's go to the 4-hour. All right. Okay. I think the trade was around these areas. So this is what we had. I had this one as the last internal break of structure. All right. And then market gave us a market structure shift around that area. So we have that change of character there to the upside. So what did you expect? You expected the market to push down, at least to come to this demand zone. See, we have this demand zone down here. And then we start looking for buying opportunity from that area. So this low here was supposed to be act as my liquidity. So this was supposed to be my liquidity. So where did I take my entry from? So since the market was still, what I was trying to trade, it was what you call a counter trend. I was trying to catch this sell before the buy movement. All right. So I saw this as the last break of structure, internal BOS here. So we had that internal BOS. Let me go to the 15 minutes time frame. Yeah, that was the internal break of structure. All right. So what are we seeing? You can see that it swept this liquidity first. We have a sweep of liquidity. And then we can see that we have this point of interest here. We have this supply zone above there. That was the point of interest. Now I'm going to delete everything from here. At a new, I'm going to delete everything from there. Now that is the analysis that I had. You can see now I have this one as my point of interest. Is it visible from the 1 hour? Let's see. Yeah, from the 1 hour, we have a fair value gap below that low, but the order block is visible on 15 minutes time frame. We have this order block there from the 15 minutes time frame, right? We have this break of structure. So this is my protected high since it swept this liquidity. And then you can see now this was the New York session. This is the New York session. So let's play out and see what the New York did. You can see now the market failed to activate my order during the New York session. You see, This one happened after the end of New York session. So it means on that day, I remember it was on Friday. You can see the day of the week it was on Friday. So I never took that entry because this one was activated before the time of the day that I'm supposed to enter my entry. All right. So I just let it go and we waited for Monday. Let's see what the market Monday did. So Monday market tried to sell. Now you have a New York session, Asia session. We try to play. Mhm. Now you can see the market is back to the supply zone. Let's see what the market did. Now, there is something that happened here. During the London session, we are see this is the last break of structure to the upside. So we have a bullish break inside our zone. So what are we waiting for? We are waiting for a confirmation. What confirmation are we looking for? M formation. So what are we waiting for? We are waiting for a market to close below here. So once we have a closure below here, then we'll have a market structure shift. Now let's play. Let's play. Exactly. Now we have a candle closing. So immediately I saw this candle closing here, I got a change of character. So now where was my entry? My entry was coming from this area. So this became my flip zone, right? So I believe we talked about our flip zone on our previous session. So you know what is a flip zone by now. So this order block is the one that led to this break of structure. So it became my flip zone. So this is where I put my entry. That is where I put my sell limit order around that area. Stop loss some few pips above here. And then my target was just 1:3. I was targeting this liquidity here, but I never put my take profit here. So I just add 1:3 around somewhere there. That was the trade. All right. You see the time of the day when this is happening during the London session. Now let's play. See now we got tapped in some few minutes to Asia session, not Asia but New York session, and by just few minutes or less than an hour, the market went ahead and eat the take profit. You see now how this is powerful. When you combine your bias very correctly with also the time of the day, the right time of the day, then I'm telling you, you have a very good strategy that uh, you will be using. All right. So those are the examples that we have. You can take as many examples that we can. We have so many examples that I can show you guys. So those are just the few examples that you normally the trade that I've recently taken. I can show you another example. Last example on NAS 100. We have this trade here on NAS 100. So basically, I'm going to clean everything on my chart. Let's do this one together. I'm going to delete everything. Then I will take you through that trade. So let's see the buyers here. So the analysis was coming from the higher time frame, of course. So we have the daily time frame. What is the daily giving us? We have this bullish break of structure, whereby later on we saw we had a change of character here. All right. So we have a market structure shift. What do you see? Market came to this supply zone, and then we were selling from that area. Now going to the 4-hour time frame, you see now the 4-hour time frame has this internal break of structure here. All right. So after that internal break of structure, which swept liquidity above here, meaning these are very strong high. So market came to this supply zone here. So we have market trading to this supply zone, and then we sold from here. Market pushed down and gave us a break of structure to the downside. Now we had up this BOS to the downside. This is a break of structure. So after this break of structure, what do you expect? You expect the market to have a pullback and then a continuation. So the market pulled back, swept this minor inducement here. So we have this liquidity market sweeping this liquidity and reacted from a supply zone. Let's go to the lower time frame and show you that supply. I think it was from the 15 minutes time frame. Let's see from the 15 minutes time frame. Let us see exactly. So from the 15 minutes time frame, you can see that we have this supply zone there. The last buy candle before the sell, that became our supply zone. That is our supply zone. We mark it correctly. We have that one as our supply zone. Oh, it's taking how long? All right, let me pull it to the right. Absolutely. Now that is what we have. Now let's go to the back to 1 hour. At this point of time now, let's see what could we have done around that area. Now you see, after the market traded to that zone, what are we seeing? We have a break of structure to the upside. All right, that is the last BOS, and then market gave you a change of character here. All right, we have a change of character around that area. So after that change of character, what are we seeing the market doing again? Oh, let me mark it correctly. We have this one as your market structure shift. So you can see again we have this supply zone here because that is where the entry came from now. So we have that supply zone from the 15 minutes time frame. If you look closely, we have that last buy candle with this as liquidity resting below there. So now I need us to have our bar replay from this area. How could you have taken this entry from this area now? Right? Because the entry was supposed to come from that area. All right. Since now these are 15 minutes 15 minutes chart, we can go to the 5 minutes time frame and wait for a confirmation around that area. All right. So now you can go to the 5 minutes time frame. What are we seeing on the 5 minutes time frame? Let's play. You see now we are still during the Asia session. Let's play. All right. Let's play and see. All right. Now we have something very interesting that is happening here. All right. So I'm going to ignore this one because I need this just a candle the news week. So I'm going to ignore that. I'm going to mark this one as my last BOS here. So you have that one as the last BOS, and then you have a change of character. Market has closed below here. That becomes your change of character. Now you can go back to 15. When you go back to 15 minutes time frame, this last buy candle here, the last sell candle becomes your breaker block. All right. So that is our breaker block because this is the demand zone that led to this break to the upside. So when the market closes below, it becomes your breaker block. So this is one of the entries that you can take. That area, stop loss above there. That is one of the entry that you can take around that area. And then you target 1:3. Let's go back to 15 to 5 minutes and see how this one could have played out. Now let's play. You can see now you are active. You're active. You see where our stop loss is? Above that eye. That is where we are putting our stop loss. Let's keep playing out. All right. So in case you missed your first entry, in case you missed this first entry, now we have a new BOS here from the 5 minutes. So we have a break of strategy here to the downside. So what could you have done again? You can see we have this very nice massive fair value gap there. So you can decide to enter within this fair value gap as your second entry. That is, you put your entry there. Stop loss, some few pips above there. That is another entry that you can take. All right. And you target 1:3 somewhere there. Let's play, keep laying out. See now you got tapped in. You got tapped in. Market try to play along with within your entries. All right. Still playing along. Now you have a break. You have a TP hit. All right. You see now the best, also you have to understand where to put your stop loss. Because if you had a tight stop loss, then I believe this move could have taken you out. Right. You see where our stop loss was? Above this eye. All right. So that would have been another entry from that area. You take your first entry from here. If you missed this entry, you could have taken this entry from this fair value gap around that area. And if you wish, you can also take it during on this order block that you can see here, this supply zone here, which also got activated during the New York session. So the market came there, tapped to that area. You can see there, that supply zone around that area. This is the supply zone that I'm talking about. That area, we got tapped in. Stop loss some few pips above there, and then you can target 1:3, which is even by targeting this low, you already got 1:4. If you want to extend it, you can extend it to the downside there. All right. But for me, those entries I missed. I just wanted to show you the entry that I took, I personally, because I was watching it from the 1 hour. So I also ignored this movement, these weeks, because these are the news weeks. So I just saw this one as the last break from the 1 hour. And then I saw this one as a change of character from the 1 hour time frame. After the market reacted from here. So I saw this, we had an internal change of character. Then I marked this one as my breaker block. So that was my PO high. So I marked that as my breaker block. Let me remove this entry. We have this breaker block here. So now I waited for a market to come to that area. Let's wait. You see the market tapped in now. I went to 15 minutes time frame. You can also go to the 5 minutes time frame because this is a 1 hour zone. But for me, I just went to 15 minutes time frame. I just want to show you what I saw. From the 15 minutes time frame, I saw something interesting. See now, this is the last BOS to the upside. So what I was waiting for is an M formation, guys. Was waiting for a market to give me a structure change in character here. Once we close below here, now I get my entry from there. Now let's play. Let's play out. We don't have a change of character yet. Now we have a new BOS to the upside. Are you seeing? We have a candle closing above there. Now you have a break of structure. So that means I'm going to move this one from that area to this area. This is my current new BOS. Now let's play out. Now we see during the London session, market closed below here. Now immediately we saw this closure. Now I have a change of character. Very perfect. Now I have a change of character. Do you see the time of the day when this is happening? Exactly during the London session. So where was my entry? My entry was here. This is my flip zone. This is the candle that led to this break of structure. So that is where I placed my entry. Stop loss was some few pips above here because I could see we had another supply zone here with a fair value gap. Market could decide to have that deeper retracement. So that is where I had my entry and I was targeting only 1:3. A simple start. Now let's play it and see how this one played out. So see, I got activated exactly during the London session. Now let's play out. So immediately we closed below here. Immediately I saw this closure here. I just moved my stop loss to break even. And then I just let the market do its thing. All right. So let's play out. And then the market, boom, came down and hit my TP. So you see now, that is how easy it is to wait for your entry confirmation. So the most important thing is to get your bias, mark your key zone, wait for a market to come to your key zone, and then go to your entry time frame. Once you shift down to the entry time frame, wait for a market to give you that indication that it wants to do what you want to see. If it is selling, wait for a market to give you that change of character. All right. So once you see your change of character, look for an area to enter. Either it's a breaker block, either it's a supply zone, either it's a demand zone, a fair value gap, depending on what works better for you. So that is it on this video. I believe this video was very helpful. I believe you have learned something out of this session. So in the next session, we are going to be looking at the risk management and consistency. As far as the strategy is concerned, I believe by now we have covered everything that you need to understand on the market structure. So the next part is going to be the account management and consistency. Since now you have a strategy, how can you combine your strategy with also the account? All right. Because remember, as much as you are having a strategy, you need to have an account because you cannot trade without an account. How can you manage your trades? Right? How can you calculate your risk management as a trader. So that is another crucial part when it comes to trading, because I believe we'll find most of the traders will find they have a 40% win rate strategy, but you'll find them they are not profitable because of the poor risk management and also the account management. So as much as you have a strategy, you need to have a very good risk management, because I always say you can have as little as 30% win rate strategy, but you are still profitable, provided you know how to do your risk management very correctly. So in our next session, which will be our lesson 6, we'll be talking about the risk management. So until then, it's a bye bye for now.